TSMC Q1 2026 Earnings Conference Call. Key questions investors want to know most after the earnings report and management's responses. Q1, is AI demand structural, and how long can it last? What are the main drivers behind this wave of demand? A. Artificial intelligence demand is extremely strong and structural in nature, rather than a short-term phenomenon. The transition from generative AI to agentic AI is driving further significant increases in computing power demand and token consumption. The company has strong confidence in AI-related demand, which is also the primary reason for upgrading our full-year growth guidance. The high-performance computing platform remains the main growth driver. Q2, when will the 3nm process reach the company's average gross margin level? What will profitability look like after equipment is fully depreciated? A. The 3nm process is expected to reach and exceed the company's overall average gross margin level in the second half of 2026. Based on past technology node experience, once equipment is fully depreciated, starting from 2027 onward, gross margin is typically at a very high level. Currently, the 3nm process is in a state of severe supply shortage due to strong AI demand. Q3, why is TSMC raising its 2026 capital expenditure to the high end of $520 to $560 billion? What does this indicate? A. Capital expenditure is expected to lean toward the high end mainly because demand for AI and high-performance computing applications is extremely strong. The company is actively working with equipment suppliers to accelerate tool deliveries and capacity expansion to meet multi-year forward-looking demand. This reflects our increased confidence in long-term AI demand. Q4, how long will the tight supply-demand situation for capacity last? How is the company responding? A. The capacity tightness is expected to continue into 2027. The company is actively accelerating cleanroom construction and equipment installation, while executing global 3nm capacity expansion plans across Taiwan, Arizona in the United States, Japan, and other locations. Although we are making every effort to speed up the process, supply remains very tight. We will continue to work closely with suppliers to address the growing demand. Q5. How does TSMC maintain its leadership position in the face of customers developing their own chips or facing competitors? A. There are no shortcuts in the foundry industry. Technological leadership, manufacturing excellence, and long-term customer trust are the core advantages. The company is highly confident in its technological leadership and will continue to invest in advanced process technologies and advanced packaging to capture all available business opportunities while maintaining strong customer loyalty. Conclusion. From the management's responses above, it is clear that TSMC holds strong confidence in the long-term AI-driven demand. Through proactive capital expenditure and capacity planning, the company has positioned itself ahead for future growth. Although challenges such as capacity constraints and initial costs from overseas fabs still exist, TSMC is well positioned to maintain high profitability and market leadership in advanced processes, thanks to its technological advantages and strong execution capabilities. This is the core value that investors should focus on most after hearing the earnings report.